Point taken, Vineet. Many thanks for that. Any questions here for the secretaries before I move on? Yes, we'll get the microphone across to you. Please go ahead. If you can stand up and introduce yourself, that would be nice.
My name is Rahul. I'm advisor to Assocham. And this is a question regarding, again, in this finance bill or the budget, we saw increase of the additional TDS and TCS. And the question here is that after the GST implementation, the information on the transactions is very extensively available in the government system. And if you look at the industry, you ask any business today, they invest far more effort and money in dealing with the TDS matters than they do even in their own tax affairs management. The request here is to consider, one, if the government can rely on its extensive digital footprint of the transactions to trace and track them, instead of TDS being followed as a default route to track and trace the transactions. That's one. Until such time that happens, at least consolidate it all. So today you found that the 5% range of TDS was reduced to 2% rate, but that doesn't reduce the compliance at all. Right, because instead of 5%, you will now deduct 2%. You will still file as many returns, as many certificates, everything you will do. The idea is that if you can come up with 2 rates or 3 rates and consolidate them, that these are the only 2-3 returns instead of 16 odd that are there in the Income Tax Act, that would ease and really mean ease of compliance in terms of what businesses are dealing with. Thank you so much.
Is this likely, Mr. Malhotra, to be part of that overhaul that the Finance Minister spoke of in the next 6 months?
Yes, certainly. So as mentioned by the Finance Minister and as, also announced and which will be implemented now, through the finance bill, this is only, a curtain raiser because there was a request, that we should reduce the number of rates. And so I suppose, that should be welcome. The number of rates reduction, helps in reduction in disputes relating to classification, etc. So that was one ask which has been met. In terms of whether the number of rates can be further reduced and the compliance burden can actually be reduced, because there are today, I think a number of sections. So perhaps, for those different sections, different returns are perhaps required to be furnished. Well, certainly, that is certainly, something on the cards, and we should certainly be looking at it. It has been our effort to reduce, the compliance burden for the industry, and in line with that thought, certainly we'll be looking at that. In terms of, increasing the spread of the TDS and TCS, I think there are primarily, some 2 proposals. One relating to TCS, where luxury goods costing more than 10 lakh rupees. They will attract a TCS of 1%. Yeah. And similarly, there is a TDS on the partner's salary. These are more of, rationalization exercises, especially the one on salaries, because other salaries are actually attracting a TDS. So while it is a tracing and tracking mechanism, these are also mechanism, let's remember, for collecting taxes. It's not only a tracing and tracking mechanism. Today, we are collecting about almost 50% of revenues. In fact, more than 51% of revenues are through the TDS. And so it is in line with that thought. Yes, the other suggestion, that use it only as a trace and track mechanism, I think that is ideal, but I think, we are many years, away from it. It will take some time for us to actually, be using this only as a tracing and tracking mechanism. I think what we should really be attempting is to be taxing the income as, it is accruing, as it is being earned. So TDS, serves that purpose.
Okay.
Yes, and I may mention, thank you, sir, for pointing that out.
So mentioning the burden on compliance, I just wanted to mention that.
Yeah, because you mentioned the burden about compliance, so we were very cognizant, of some of the cases of prosecution that have been taken up by the department and the notices, that are issued for prosecution, we have decriminalized, as you would have noticed in the budget, delays in payment of TDS that is collected till the time of filing of the statement for TDS. And we are also going to issue an SOP along with, guidelines for compounding with regard to TDS and other offences as well.
Just want to add one thing,
Yes.
and I'm please don't take this as trying to contradict what you said. In principle, we are fully in agreement with you to have as few rates of TDS as possible, as simple a system as possible, as few sections, as few returns, no question. However, please realize when you ask for fewer rates, this is exactly what we were asked on capital gains. We were told there is a 10%, there is a 15%, there is a 20 with indexation, there is something without indexation, so many different sections. I have to fill one part of the form for LTCG for listed, I have to fill another part for unlisted, I have to fill one part with index, I have to check the index, what was the index in 2001, what is the index in 2021, and it's not exactly the same as CPI. It's so much burden. Why don't you just simplify this whole thing? So we have tried it.
So be careful what you wish for. Is that the message?
No,
that you're
I'm saying
sending
that's,
out?
no, I'm repeating what I said yesterday. Simplification is not simple. Simplification is complicated. Getting to a simple structure is not easy. And simplicity has a lot of virtue, but the journey to simplicity, it doesn't mean only win, win, win. No simplification will happen at the bottom rate of all the simplified items. And this is true of GST as well.
Well, I'll get to GST in just a second, but Shubhakant, do you have a question here for the secretaries before I get to GST and other issues? Ashmit, the microphone, please.
Sorry.
And I think that is an emphatic message that's come out. Rahul, I'll come back to you. Okay. Okay, go ahead.
Sir, I just want to say this, that the rates on the capital transactions on stock market and other financial assets are certainly much less as of today compared to the rates on ordinary income as applicable rates, right? From a policy perspective, when we look at this and compare it globally, whether there is such a differentiation in the rate for the capital market versus other securities, etc., or financial assets is, you find a mixed example. Very few you find there is a difference too much between the ordinary income and this. So from a policy perspective, what do you think is the justification for a lower rate on passive income, so to say, in financial market and assets?
So I'll give you an economist perspective and he can supplement that. Globally, it's not universal, but globally capital gains, especially on market securities, tend to be taxed lower than ordinary income, and there is a very practical logic to it, which is that capital gains, I'm giving a theoretical conceptual answer, capital gains tend to occur intermittently in lumps. That is, unlike interest or dividends, they don't arise every quarter, every half year, every year. You hold a share for 10 years, you sell it. Or you hold it for 3 years, you sell it. You suddenly get an amount of income in 1 year. Since we all have progressive tax systems, it can throw you into a much higher bracket in the year. Now you can say I can give you marginal relief, but that's all very complicated. So if you are thrown into a higher slab, is it fair that you actually earned it over 10 years, but this year it's putting you in the 39% tax bracket, even though normally you are in the 20% tax bracket? Therefore, as a simplification, I'm not saying it's universal, but globally there is a lower rate on capital gains because of the nature of the income being lumpy. It is sometimes argued that it's because people are taking risks in the stock market, as if the MSME investor is not taking risks when he starts a partnership firm and pays 39% on his partnership income. So risks are taken by a lot of people, apart from market risks. But there is a logic for a lower rate. Now, how is this logic applied? In some countries, it's applied as a fraction of the normal. So Canada used to tax capital gains till this budget at 50% of the ordinary rate. So if you takes the capital gain, adds it, 50% of your income is capital gain. They moved it to 66% this year in the April budget in Canada. Okay, so that's one way of doing it. Other countries have flat rates. Most countries have flat rates on capital gains which are much higher than the flat rates that have been proposed yesterday. That point which you make is very true. And a vast differential is not justified. It is something where a differential is justified, but it's not justified to have too much of a differential because it is another form of income along with interest, dividend, etc., etc. Then often I get this question, oh, you know what, I'm paying securities transaction tax, I am paying capital gains tax, I am paying dividend tax, so I'm being taxed in so many places. It is an unfortunate fact that the world's most developed capital markets, US, UK, wherever, they also have both capital gains tax and dividend tax. They also have both corporation tax on the corporation and tax in the hands of the dividend earner. They have double taxation of dividends. They have taxation of all of these things. This is the way the world has evolved because different parts of it have different justifications. So in a realistic world, all of them are likely to continue. We are not likely to be an exception as we become a developed country, and our rates are not very high by international standards. This is my sort of theoretical answer.
No, sir, you have summed it up very well. Just one small point to add, and that is the rates also depend on, the investment needs of the country. So the developed countries, may have a higher rate, of capital gains taxation because, they may need lower investments in equity, and developing countries, typically will have a lower rate of capital gains. It depends on, the needs of each country.
Monetization.
Any questions here for the secretaries from anyone? Yes, go ahead. If
So
you can stand up, the cameras
Yeah.
will be able to catch you. Yeah.
Mr. Jain, this is a question that whether in the new document, is there a change in the way the dispute resolution is resolved through arbitration?
When we finalize the new, which will come in with this thing, arbitration we have still not changed, but there are some recent changes which the Ministry of Finance has suggested. We'll have to consult them once again before we bid out. But the document which we had finalized, we had not changed the arbitration clause, but what we had done, the real root cause of arbitration we had removed by and large. Look, what are the major reasons of arbitration? Number one, the PCUs. PCUs and toll have no correlation. PCU is a concept which is used for the designing of the roads, while the toll, which is the revenue, is based on the vehicle, actual vehicle which is plying. So we have brought in a concept of equivalent vehicle units. So there are two terms which determine and make things absolutely clear. So, and then we have balanced risk and rewards, like plus minus 5% is concessionaires problem. Thereafter we step in and support in the case of downside, and in case of upside we take some part of the gain, which is a balanced thing. Earlier this was downside, we were not bothered after giving a certain compensation. Second is termination payments. What we have worked out, we have given a table now in consultation with the banks. What you should have repaid to the bank by this particular point of time is what is the will determine the termination payment. Otherwise, termination payment itself had for this or this or this and was very ambiguous. We have tried to remove all the ambiguities. So my personal feeling is, actually we want to go down a road where we don't need arbitration. Plus the project preparation, the land acquisition, the clearances. So actually the award will happen after we meet these basic criteria. So I hope the arbitration is not required, even though provision is there.
Not required at all. But we'll come back to you with more questions, sir. DPIT Secretary, I want to